Yeah. Good evening, one and all. Yeah. Good evening, Kiran. Good evening, Aisha, Ishan, Darshan. Well, same good students who have been like consistently been following the classes. I can see them that you're there before time and attending this. Very, very happy that you're so very dedicated. This dedication is what is important. I would say more than anything else, that you're part of the study regularly and you are doing your kind of back revision at home. That is really encouraging to me, that my classes are impacting you to, and it's at least encouraging you to go back and read through the material. So that is very important, that whatever we discuss in the class is being studied or at least referred in the material, so that you are through with the material. If you just go and read the material by yourself, you may have some doubts. Okay, that's when our classes will help you, that if you attend our classes and then go to the material, you'll see the things in a different manner, you'll understand it in a better manner. And if you have any queries, you have this opportunity to ask in the classes. So that's how many students are making use of this opportunity. I'm really happy for that. Great. So we'll, as usual, we'll start with the questions, what is there, and then we'll cover the charge. So charging, we have tried to bring the concept of reverse charge in such a manner that you understand what is forward charge, what is reverse charge. That was my objective, that you don't get confused with forward charge and reverse charge, and you have understood reverse charge in such a manner. So let's take the journey of reverse charge and let's go to composition scheme also. So we have lot of brainstorming, a lot of study to be done today. Let's start with this. So we'll start with the questions. Can you explain GTA under reverse charge mechanism? Yeah. So GTA under reverse charge mechanism, we had done a fair bit of review, but let's do a revision of what is GTA on reverse charge. So we know what is reverse charge, that the supplier of service who provides the service generally charge the GST. He is the supplier and I am the receiver. So supplier charges in his invoice and receiver is one who pays it. So liability is on the supplier always. But in reverse charge, the liability shifts to the receiver. One of the typical example is a goods transport agency. So we understood that what happens in a goods transport agency case, a GTA service is a provider. Okay, if he, now it has two options, right? Like there are two rates. So because of these two rates, there is two options which are available. So GTA can say that I will pay GST provided that I get the full credit. So government is saying, okay, if you want to claim all your input tax credit, then you pay GST at the rate of 12%. Okay, and then the receiver will not pay. But if you are not paying and the receiver is paying, then the receiver will pay at 5%. That's when you see that payment of GST at 12% and full ITC is taken. Second option is payment of GST at 5% without ITC. So when will this option work? When a GTA is providing services to a registered person. Okay, GTA service provider is providing to a registered person. Okay, not to for those 7 categories. So first to registered person. If he's providing to a registered person, then he will pay GST under forward charge by the GTA itself. So if you see under 12%, everything it will be that it will be payable under forward charge. And even if he's providing to an unregistered person, now within that unregistered person, if these unregistered person are these notified people, right? Then also it is under forward charge because the rate is 12%. And if they provide to anybody else, then it is exempted. Okay. And if it is under reverse charge, the rate is 5%. If it is provided to a registered person, the registered person will be under reverse charge. And if it's provided to any unregistered person, then if they are under those 7 category of people, then they have to pay under reverse charge. If they are not under those 7 category of people, then they don't have to pay. Now, who are those 7 category of people? Factory registered under Factories Act, society registered under Societies Act, cooperative society, a person registered under GST, already covered there, but it's included here as well, a body corporate, a partnership firm, and a casual taxable person. So this is how the GTA works. Okay, now who has to pay tax on reverse charge if the supplier doesn't pay, if the GTA doesn't pay? Whether the consignor or the consignee, it depends on who pays, who is paying or who is liable to pay freight to the GTA. If the consignor pays it, you will have to see from his perspective. If the consignee pays it, you'll see from his perspective. Clear? Please explain service supplied by a director of a company or body corporate in reverse charge. Great. Ms. Wahida, what happens is a director provides services to a company in various hats. So he can wear the hat of an employee, right? So there is generally an employment contract between a company and a director. In that case, there is an employee-employer relationship. In that case, there is no GST, right? Because we have seen in Schedule 3 that a service provided by an employee to the employer is not under GST, is not under supply definition because of exclusion given in Schedule 3. So what else can a director provide as non-salary if he's providing any other services, like he's providing some business consultancy or he's providing some sitting services? So when such services are provided by a director to the company, on that the company has to pay reverse charge. So how do you decide this? How do you determine this? One way to decide this is issuance of a document under income tax. So under income tax, you have TDS deduction. So if this TDS is deducted under 192, okay, which is salary deduction, then you don't have to pay reverse charge. If the payment to the director deduction is made under 194J, it means it's a TDS deduction for professional services. That's when you get to know that yes, it is for professional services. You have to pay GST under RCM in that case. Okay. Sir, can unregistered GTA can opt to pay GST under forward charge at 12%? So if he opts to pay at 12%, then he has to register, right? The main idea is if he's unregistered and if he charges 12%, first of all, he cannot collect any GST. An unregistered person, others cannot collect a GST and he cannot claim the credit also. So the objective of the 12% itself will be lost. So he has to register, collect 12% from his customers and he can claim all the input tax credit. Okay. Because if that is the option one. Second option, if he's unregistered, then he doesn't collect and he doesn't get credit also. So the receiver will pay at 5%. What is electronic commerce operator? We'll discuss now. Business entity तो threshold ने नीचे ही उन्हें तो RCM apply ही होगा ना? नहीं, business entity अगर threshold से नीचे है तो सबको RCM नहीं लगेगा. अगर वो business है और ये 7 categories में है, हर RCM का category बताता है कि किसको RCM लगेगा. So अगर वो उस कैटेगरी में है, जैसे registered लिखा है तब अप्लाई होगा, अगर unregistered लिखा है तो उनको अप्लाई नहीं होगा. So what is actually the concept of ITC? If we will get some portion of the tax paid back, then why we are paying in full value? So Goba, how this work is you pay as a supplier and you get as a receiver. Now the value addition, if you get, you don't get the full thing, no, because when you sell, you can sell at whatever value. When you're buying, you don't get, you will not get to know at what rate you will sell, and you will not know if the government will not know that when will you sell, what rate will you sell also or no. So they will give you the credit at the time of purchase, and when you sell it, whatever taxes you pay, you have to pay, and that you have to pay, right? So this is a benefit which is given to you, that when you're paying your tax on your sales, this is the portion which you can reduce it. So that's why it's a ITC, which is a credit which is given to you, and it's not like why should I pay double taxation? Okay, so it's a chain, it's a process that they can't give you just credit just like that. If you sell something, you pay tax on it, and when you buy it, you offset this. Okay, that's how the process works. Notified persons are persons in notification 13, correct? Okay. Other question is with respect to sponsorship. So how does sponsorship work? So just understand who is a supplier and who is a receiver. Okay, if you are paying money, okay, if you're paying money, Gunapali, how does it work? If you're paying money, are you a supplier? No. If you're paying money, you are a receiver. You're receiving something, that's why you're paying money. So let's understand this clearly. A supplier is one who supplies goods. He will not pay money, he will get money, right? And receiver is one who receives services and who pays money. So the transaction flows like the supplier pays, the receiver pays and receives the service. So we can say that anybody who's paying is the receiver of service. If he's not receiving, then he'll not pay. So in sponsorship, I am a company, I'm sponsoring. It means I am paying. It means who is receiving the service? I am receiving the service. If I am receiving the service and I am paying, right? So it is clear that the sponsorship, because it's a little tricky in sponsorship, right? I'm paying it, so I am receiving. So the company who is getting the sponsorship, he is supplier then. So if he is the supplier, he should charge GST for any event, for say any college fest. If I am paying something, generally the college should charge GST because he is the provider of this service and I am the receiver of this sponsorship service. But they don't charge, right? Because see, colleges are not registered under GST, or any such sponsor receiving entity may not be registered under GST. So the government has said that you are a sponsorer, you are sponsoring it, so you have money to pay, you are into an organized sector. So when you are paying this money to the supplier, pay the GST. So that's the reason when a sponsor, a company who is sponsoring is paying for some activity, they will pay under reverse charge. Okay, the person who is receiving the sponsorship will not pay. The person who is paying the sponsorship amount will pay the GST under reverse charge basis. Clear? Sir, in section 9, subsection 5(1) and 5(a), supply of service is from government in both. And difference in both is that recipient in 5(1) is any business entity located in taxable territory, and 5(a) is any registered person under CGST Act 2017. This is the only difference in both. Section 9, subsection 5(1). I'm not clear on this. Let us take the study material and see what are you trying to see. Okay, Bhumika, you'll have to explain your question in a much better manner. Those goods under 9(2) are subject to central excise duty and VAT at present, sir? Yeah, correct. GTA can also opt to pay GST at 5% under forward charge without ITC? No, he cannot. So if it is 5%, he cannot opt because he does not have an option to pay under forward charge in that case. If it is 5%, it is always reverse charge itself. Okay. If GTA registered under GST, he is under 12% slab by default. True, that's correct. What is a casual taxable person? Casual taxable person means a person who is registering, who is already registered in one state, and he wants to take registration in another state for a short duration, like say for 3 months or 6 months or maximum say a year. He's having some event and he wants to do some exhibition in another state. Then he's taking a registration. That's called a registration as a casual taxable person. Means he's not doing a business regularly. He's doing a business for a short-term period. Okay. If he's having an exhibition, then he'll have to first register in that state as a casual taxable person, then conduct the exhibition and pay his taxes. Because then after he finish off the exhibition, the government cannot collect any taxes because he'll come off to his own state. Right. So once he finish off his work there, he files his returns, closes it, then he comes back. So that's the reason there is a deposit which is collected from a casual taxable person at the time of registration. Okay. So that once he wants to finish off or file off or cancel the registration, the deposit is adjusted with the tax, and then his registration is cancelled. So casual taxable person is a can tell a small term or short term registration which is given to a person when he goes to another state for doing any business. Okay, there is a question on page 3.18 of the material, which says that what happens in case of TDR and FSI. So supply of TDR, FSI long-term lease of land by a landowner to a developer are exempt. When is it exempt? If the constructed flats are sold before issuance of completion certificate. Okay. Now there is this TDR FSI long-term lease thing wherein if I'm a landowner and I am having some extra rights to construct extra floors. Okay. Now I have a right to construct one floor extra. This government gives to me as a right. Generally, it gives this right when a land has been acquired. Now I have a right to construct extra floor. Now I don't want to use it. I will sell it to a developer because he needs it, right? So these TDRs are kind of a right which I can sell it. These are all scripts which I can sell it. When I give the script to a developer, now they're saying that it is exempt. When it is exempt, if that developer constructs the flat and sells it, because after issuance of completion certificate, he will not pay any tax, right? In construction contract, we knew that what happens when a building is constructed, it's an immovable property, right? Now, when it becomes an immovable property, once you receive a completion certificate. So before completion certificate, anything, if it is sold, it is liable to GST. Anything which is sold after flats which are sold after issuance of completion certificate are exempted, right? Or because it becomes an immovable property. So they're saying that if you take any TDR, a developer, if you're taking any TDRs, we will not levy tax on you, provided you sell your flats before issuance of completion certificate. Why? Because then the government will get the revenue. If they don't sell before issuance of completion certificate, then neither on the sale government is getting tax. At that point of time, reverse charge will trigger. Okay. Exemption of TDR FSI long-term lease is withdrawn in case of flat sold after issuance of completion certificate. So if it is sold after issuance of completion certificate, it is exempted. Exemption is withdrawn, but such withdrawal shall be limited to 1%. So if they sell anything, then the reverse charge will trigger. Reverse charge will trigger at what rate? At two rates. 1% if it is a affordable house, and if it is non-affordable house, it is 5%. So that's what is this explanation being said, Chunky. Please let me know if you understood it. Who is the business facilitator and business correspondent? A business facilitator, all these kind of agents who help in doing this business facilitation. So those business facilitators providing services to anybody, okay? The person who is receiving the service of a business facilitator will have to pay under reverse charge basis. Okay, Bhumika, I understood your question now. 9.5 says that the government may come up with some kind of classification wherein some category of supply is exempted, right? And 5B says that services supplied. So 9.5 is giving a power. So 9.5 is a separate thing and 5B is a separate thing. 5B is under reverse charge, saying that 9.5 gives a power to the government, saying that when you can classify something as services, or you can categorize something as supply is goods and not services, and it is supply of service, not of goods. So that's a different thing. And 5B of our notification gives saying that any services received from the government is exempted, it is liable to reverse charge. So this is separate and that is separate. Okay. So TDR and FSI. Okay. What else is the query, Harshita? TDR and FSI. What is TDR and FSI? Firstly, that any right, whatever I as a landowner, I will get some rights. Now this rights, I don't want to use it. Yes. Okay. This right, I don't want to use it. So I'm giving this right to somebody. Now, who is this somebody? This will generally be a developer who wants to build extra floors of the building. To get the extra floors built, government has given him permission to build 10 floors. Now he wants to build 11 floors. If he constructs anything beyond 10, it will become illegal. But if he buys this TDR, then he can get the approval to build the 11th floor also, right? So he will buy this TDR and he will pay some consideration. Now, if he pays some consideration for the landowner, it is some amount which is getting. Now, landowner does not have to pay GST. The builder has to pay the GST under reverse charge, right? What we said, the person who's paying is the service receiver. So builder is the service receiver. He has to pay GST under reverse charge. Now, will he pay GST under reverse charge? First instance is no, he will not pay. Why he will not pay? Because the provision says that, when I'll read the provisions again, long-term lease, any person to promoter, long-term lease or FSI and TDRs, all of this is under one category. When any person provides to a promoter, it is coming under exemption category also. Why it is exempted? Because the government is saying that we don't want to charge you twice. Saying that when you are buying from the TDR from the landowner also, we will charge you. And when you sell the flat also, we'll charge you. No, we will not charge you once. So at the time of this TDR receipts, don't pay me any GST. But when you sell the flat, at least pay GST. Now, when he sells the flat, will he pay GST or not? Depends on the completion certificate. So if he sells the flat before completion certificate, he'll pay GST. So that's fine. Government is getting the revenue. No questions asked. You don't have to pay reverse charge on this TDR part. But if you're selling this after issuance of completion certificate, it means what? Was I gave you this benefit of non-payment of GST with the assumption that you will pay GST on your outward supply. Now you have sold your flats after completion certificate, so you're not giving me any revenue. So you pay me the reverse charge now. So when you are got the completion certificate and you have sold any flats, then you pay GST on reverse charge basis on this TDR and FSI. Clear now? Mayur, do you have theory or practical in this chapter? In this, you'll have both theory and practical. So in this problem solving session, you'll see this, whatever theory we are using now will get applied and you will understand it much better manner. Okay, so let's continue our session on other RCM portions. Okay, so next RCM part is on renting of motor vehicles. Now, renting of motor vehicles, you have 2-3 things. One part is when you go in a cab, in a Ola or Uber. That is different. That is not renting. Okay, that is hiring a cab. And hiring a cab, you are not directly contacting the cab driver. There is an aggregator in between. This aggregator is Uber and Ola. So this is called an e-commerce service. So this e-commerce service, when the buyer and seller are connected together through a app or a web service through the internet, okay, this is called a e-commerce services. So when such e-commerce services are provided, the tax liability of the provider, because cab services, there's so many cab people, they will not pay, right? Because they are unorganized or they are below the threshold limit. So the liability of the payment of tax shifts from the provider to the e-commerce operator. So when you go on a cab, the tax is paid by Uber and Uber then collects it from the customer on behalf of the cab driver. So ultimately the receiver pays it, but the collection mechanism is not the service provider, but the e-commerce operator. So that's the first category wherein when you go in Uber and Ola, the e-commerce operator pays the taxi, pays the tax on the trip. But now what we are talking is another kind of service in case of renting of motor vehicles. This kind of thing is when I take a car from a company or from a cab cab company, not an aggregator. So in that case, there can be two things. When it is a renting of motor vehicle, including cost of fuel. So you're renting the motor vehicle in such case, including the cost of fuel. Okay. In that case, what happens? If it is without fuel, then it is under normal charge. But if it is including cost of fuel, if you are taking a renting of motor vehicle, including cost of fuel, then the reverse charge will come in. When it will come in? If it is a service provided by a body corporate. Now, this activity of renting of motor vehicle, including cost of fuel, is given by a company. Like you have this cab aggregators, right? Not cab aggregators, this cab lending companies, wherein you can take the car, use it for 5 hours, they will charge you for 5 hours, and they will also fill the fuel and give you, right? Anything above it, you'll have to pay, but the charges is generally is considered as including of fuel. Okay. So in that case, what happens if that company is a body corporate, if it's a private limited company or a partnership or a LLP, not a partnership firm, LLP. If it's a private limited or a LP, it will be treated as a body corporate. If they are providing the service of this renting of cabs, renting of vehicles, renting of motor vehicles, then and the service supplied to any person, then if the supplier is availing full ITC, then it is 12%. If the supplier is availing limited ITC, then it is 5%. Now, what is this full ITC, limited ITC? When the motor vehicle company, okay, when the motor vehicle company is providing the service and they're saying that we will claim all the ITC. Okay, you claim full ITC, then you charge 12%. Okay, and I will pay the 12% to him. But if they are claiming limited ITC, it means what? They cannot take all the ITCs, but they can take only ITC of input services in the same line of business. If they are taking limited ITC, which means they're taking ITC of any other company, if they didn't have a car and they've taken car from another company and that company is charging GST, only that credit they are taking. That is called limited ITC. So what are the other credits which they are not claiming? They're not claiming credit of audit fees. They're not claiming credit of rentals. All that credits they cannot claim. Then for this limited ITC, your rate will be 5%. Okay. So a body corporate providing services of motor vehicle, renting of motor vehicle, including cost of fuel, then they have to pay under forward charge only. So if it's a body corporate, it will be always under forward charge. If it is under forward charge, they have two options, either 12% with ITC, full ITC, and 5% with limited ITC. It cannot be under reverse charge because the service provider is body corporate. But if a service provider is other than a body corporate, which means is a proprietorship or a partnership firm, then if the service is supplied to a person other than the body corporate, if I am if I am an individual and the service provider also is an individual, then it has to be paid again under forward charge itself. He has to pay. He has to register and pay. Who? The motor vehicle company has to register and pay. But if he is a proprietor and I am a body corporate, I am a company and taking services of a cab who is unregistered, who is non-corporate, means he is a individual or a partnership providing services to a body corporate, then body corporate has to pay tax under reverse charge if the supplier is availing limited ITC. If supplier is availing full ITC, then it is again under forward charge. Okay, very, very confusing, but understand this very clearly. Wherever a body corporate comes in, the liability is on him. See, here we saw the service is provided by a body corporate, then it is under forward charge. Then rate option is there, that's a different thing. But whenever the service is provided by a body corporate, it's under forward charge. If the service is provided by other than a body corporate, then the receiver, you'll have to see if the receiver is a body corporate, then again, two options, 5% or 12%. 12%, if he says that I will claim full ITC, then you pay GST. If no, you're claiming limited ITC, then I will pay GST at 5%. Okay. The supplier is other than body corporate. The supplier does not issue an invoice charging GST at 12% from the service recipient and the supplier supplies the service to a body corporate. So in these three conditions only, it will be under reverse charge basis. Okay, so let's understand this with a same manner like how we did for GTA, so that you will understand this in a much better manner. But you understand this chart, this is really important for you. Okay, so we're talking on GST on RCM when in case of this service of renting of motor vehicle, including cost of fuel. So who is the service provider? A company A. It means it's a body corporate. A body corporate providing services to another body corporate. In this case, who is the person liable to pay GST? Firstly, it's a body corporate. So in this case, who is the person liable to pay GST? First of all, whether company A or company B. And what type is it? Is it forward charge or reverse charge? Ishan Bish, your observation is correct. Body corporate to person, person to person, person to body corporate, and the fourth category is body corporate to body corporate. Why body corporate has two options to avail ITC? That's why the government has given, because they want to claim ITC or they don't want to claim ITC. The rate differs. Because of the two rates, they have this option. Company A forward charge as a body corporate is providing services. Correct. So everybody has understood clearly, when a body corporate provides services, it is that person who has to pay GST. So the correct answer is body corporate, which is company A. So company A will pay GST under forward charge. Now, second scenario, company A is providing services to a partnership firm. In that case, who is liable to pay GST? Which one is beneficial to taxpayer depends on case to case. If they have too much of ITC, Shubham, then they may go with ITC. If they have limited ITC, then they may go with 5%. So it cannot be said that which is better. It depends for each cap company. So that's the reason they're given both as options. So whichever is beneficial, you can choose it. Second one, yes, everybody is clear. No, it is company A itself, because it's a body corporate. Provide to anybody, you have to pay under forward charge. Now, third scenario, partnership firm providing services to another partnership firm. In this case, who is liable to pay GST? Person includes body corporate. When they've said body corporate specifically, Ishan, The body corporate is a specific word, so you have to see whether the service provider is a body corporate, then he will have to pay under forward charge. Okay. In third scenario, it is partnership firm A. Okay. Person liable to pay GST from a non-body corporate providing to another non-body corporate. It is also under forward charge itself. It is also under forward charge because from a non-body corporate to non-body corporate also it is under forward charge. A cooperative society registered or unregistered to a partnership firm. In this case, what will happen? Again, same thing, non-body corporate providing to anybody, it is under forward charge itself. Okay, so don't get confused because whether it's partnership firm or cooperative society, it's a non-body corporate. So in case of renting a motor vehicle, we have two categories clearly, body corporate, non-body corporate. So if it is non-body corporate providing to another non-body corporate, it is again under forward charge. Now, this is the partnership firm providing services to a company. In this case, what happens? Partnership firm under forward charge? No. If it is a non-body corporate providing services to a body corporate, then it is under RCM. Okay, it is under RCM, not forward charge. So a body corporate providing services, there are four scenarios now. Body corporate providing services to another body corporate. First body corporate has to pay A is a body corporate providing services to B, who's also a body corporate. The liability is on A itself under forward charge. Scenario 2, a body corporate providing services to a non-body corporate, again under forward charge because A is a body corporate. The service provider is a body corporate. Third scenario, a non-body corporate providing services to another non-body corporate. Again, it is under forward charge itself. Fourth scenario, a non-body corporate providing services to a body corporate, then it is under reverse charge basis. Only in that fourth leg, it is under reverse charge. All other leg, it is under forward charge. Correct. And we have to check if supplier is availing ITC. So you have to take a declaration. If he is giving you an invoice with 12%, it means it is under forward charge. If he's not taking, in the fourth scenario, if he's not taking ITC, then and he's not charging any GST, it will be under reverse charge. Here, so sixth one, a registered dealer, Mr. A, providing services to a company A. What happens in this case? Well, sixth one, everybody has given a correct answer. It is company A under reverse charge. So non-body corporate providing services to a body corporate. A company providing services to another dealer who is registered under GST. Company A under forward charge. Correct. So company A under forward charge. Scenario 8. A registered dealer Mr. A is availing full ITC, providing services to company A. In this case, is it Mr. A or company A? A registered dealer providing service to a company. What happens in this case? Not getting the correct answer. And clearly mentioned he's availing full ITC. Okay, few people are getting confused. They're saying company A. It is not company A, it is Mr. A, and it will be under forward charge. Why? A non-body corporate providing services to a body corporate, we said it is under RCM, but we had one other condition. No, if the service provider is claiming full ITC, then it is under forward charge. So in this case, a non-body corporate providing, so Mr. A means is an individual, so a non-body corporate providing services to a body corporate, and the service provider is claiming full ITC, right? Then it is the person who's claiming full ITC, he has to pay GST at 12%. So in this case, it is Mr. A. Okay, understood the difference now? Non-body corporate providing service to a body corporate RCM if the body corporate is availing limited ITC. If they are availing full ITC, here it is the condition is availing full ITC, then also it is under forward charge. Unregistered dealer Mr. A supplies less than 20 lakhs. His supplies are less than 20 lakhs. He is supplying it to another unregistered dealer Mr. B. What happens in this case? Mr. A, FCM, Mr. A, FCM, everybody seeing Mr. A. Only one person has given a correct answer. Just think over and give your answers. This is a little tricky. Okay, fine. I've got very few correct answers. Renting of motor vehicles include only road transport, sir. Renting of motor vehicles, yes, includes only road transport. So the correct answer is it is an exempt supply. Why? Because he's an unregistered dealer. The person who will charge GST should be registered, and the other person who has to pay reverse charge, he should also be a body corporate. So in this case, it's not a body corporate, and the supplier is not registered. So he's not claiming ITC at all. That's why I mentioned that category that he's a supplier with less than 20 lakhs. The threshold limit is 20 lakhs. So if he's less than 20 lakhs, he cannot claim ITC as well. So he's not claiming ITC and is providing to another person who is not registered. So it will become an exempt supply because there's no levy in that case. Understood? So a person, non-body corporate, providing services to non-body corporate, it will be under forward charge, but the non-body corporate who's providing the service should be registered. No, if he's not registered, then he cannot collect the GST at all. But see this scenario of scenario number 10. Unregistered dealer, he is having supplies more than 20 lakhs. He is unregistered, but his turnover is more than 20 lakhs, which means he has to register. He is not registered. In that case, it will be the liability on him and it will be under forward charge. Why? Because he's here, though he does not have to register at all. In this case, he has to register, but he did not register. So he'll not get an escape route. He will have to pay, okay, and it will be under forward charge. So be careful. Just registration is not the criteria. His turnover also is the criteria. If his turnover itself is small, then he does not have to register. So no GST liability in that case. If his turnover is more than 20 lakhs, he is liable to register, but he is not registered. Then it will be under forward charge. Yeah, that's your question of GTA on forward charge. If GTA has to pay under forward charge, it's always under 12%, not under 5%. Is turnover checked every year or only once? So before registration, it is checked every year. After registration, it is not checked. So before registration, you have to check every year. If any year you cross 20 lakhs, then you have to register. But if you're every year saying 20, below 19 lakhs, 18 lakhs, things like that, then every year you'll have to check it. Okay. Unregistered dealer A providing services to a company A. What happens in this case? Reverse charge, no doubts. Company A, registered or unregistered, but claiming full ITC. Okay. And providing services to company B. What happens in this case? Company A under forward charge, correct? Company A will be under forward charge, whether they're claiming ITC or not claiming ITC. If it's a body corporate, they have to pay GST under forward charge. Good. Everybody is now clear with this. At least now we can go back and read through this chart so that we understand this in a much better manner. Right? Now we'll understand this in a much better manner. Saying that simple renting of motor vehicle, if it's a body corporate, they will pay under forward charge. Now, if they're claiming full ITC, they'll pay 12%. If they're claiming limited ITC, they'll pay 5%. And if it's a non-body corporate, if they're providing to another person who's other than a body corporate, they will pay under, again, forward charge, and then again 5 and 12. But if they're providing to a body corporate, then if they are availing ITC, again under forward charge, but if they're availing limited ITC, then it is under reverse charge. Clear now? Okay, so let's proceed further. Remuneration to director, whether director is an employee or no, is decided. If he's an employee, then Schedule 3. If it's a non-employee, then under reverse charge. Like who could those be? Independent directors or other directors who are not employee, then it is GST under reverse charge. If it is ascertained that director is an employee, then activities performed in the course of employment not liable to GST. To check employment relationship, check the TDS deduction under section 192. If it is under 194J professional services, then liable to pay GST under reverse charge basis. What are the important points on overall RCM? There is no concept of partial reverse charge that service provider will pay some amount or service receiver will pay some amount. Under service tax, that concept was there that 30% service provider was paying 30%, 70% service provider was paying, 30% service receiver was paying. But under GST, if it is under reverse charge, then 100% has to be paid by the receiver. Nothing will be paid by the provider. Okay, so there is no concept of partial reverse charge under GST. Second point, all taxpayers are required to pay tax under reverse charge have to mandatorily obtain registration. And the threshold limit is not applicable. If they have said that if it's a body corporate who is liable to pay GST, now whether they will have to, they don't have to see the threshold. While I am a service provider and I want to pay GST, here my threshold limit is seen. But service receiver, if under reverse charge basis, we have seen that various categories that if a lawyer is providing services to a body corporate and if he's not registered, even then you will not see his threshold. Once that you have taken a service from an advocate, then you will have to register and pay GST under RCM. Then you will not see the turnover limit. Okay. Payment of taxes under reverse charge is important. You cannot claim ITC. So when you read the ITC, you will get to know this much later. But just keep this in mind that any reverse charge, whatever you are paying, you cannot pay from your input tax credit. You will have to pay from your cash itself. You cannot claim ITC to pay the GST on reverse charge basis. Now, when you say reverse charge basis, when I am fourth point, when I have paid the reverse charge basis, the recipient, I'm a recipient, I'm paying. Now, I can take the credit of the tax paid on inverse supplies, which is liable to GST, once the recipient makes payment of tax in cash. So once I pay the GST, then I can claim the credit of that all as well. Okay, so it's not like reverse charge is a burden. Reverse charge is only obligation which is shifting from the service provider to the service receiver, and service receiver has the full liberty to claim it, provided all other conditions of ITC are satisfied. But the important point is if he pays it, he can claim it. Adarsh, your question on service by way of renting of residential dwelling to a registered person is not there? No, it is not there because this amendment happened later on. Okay, now we understood reverse charge. Now we'll go to e-commerce operator. E-commerce operator means A supplier providing services to a customer. Now this customer, how will he get to know? He'll get to know through this e-commerce operator. Customer places order on the e-commerce portal. E-commerce portal will tell that this is a customer we have founded. Please deliver goods to him. So they will deliver goods to him. The customer will make the payment to the e-commerce operator. E-commerce operator deducts his commission and makes the payment to the supplier. Right? So this is how the e-commerce platform works. Now on this e-commerce operator, what all are the categories where the liability is on e-commerce operator? Not all services. They have specified certain services under 9.5. They said that yes, these are the services on which e-commerce operator you have to pay. What are these services? Transportation of passengers by radio taxi, motor cab, maxi cab, and motorcycle. So all this aggregator, Ubers and Olas, they will have to pay GST. Supplier of service can be any person. Who is the person liable to pay GST? E-commerce operator. Then providing, so we understood this, providing transportation of passengers. Okay. And second category is providing accommodation, hotels, inns, guest house, clubs. So you have this Airbnb, you have this Oyo apps, right? In such cases, they're providing accommodation, hotels, and inns. Any person except who is liable for registration. So if he is registered, then e-commerce operator will not pay. If he is unregistered, then e-commerce operator will pay the GST on his behalf. So if he is registered, he will have to pay GST. If he is not registered, then it will be paid by the e-commerce operator. Then the service by housekeeping, such as plumbing, carpentering, etc. So it just says etc. It means all kinds of housekeeping services, which means this we have this app called as what is this? Cleaning app. I'm not getting the name now. Urban Clap. Okay, so all services of this Urban Clap and things like that. When you engage this person for cleaning the house and things like that, he will not be registered. If he is registered, then he will pay. But if he is not registered, then the liability of that service will be paid by the e-commerce operator. Last point implies that recipient can claim ITC. Yes, they can claim tax what is paid on reverse charge as a ITC. If not register for RCM is temporary, or he'll become registered permanently. Very good question. So because of that I've taken one-time lawyer services, right? I will register and pay. Now, is this registration temporarily or permanent? It's not temporary registration, it's a permanent registration. So if you have taken any lawyer services and your turnover is still below the threshold limit, you will have to register and pay. So once you have registered, then you are getting into a trap and you will have to pay GST on your supplies also. So once you are registering, then be careful. On all your supplies, you have to pay GST. Okay. But if you want to get away with it, then you'll have to cancel your registration. So if you cancel, then you'll be out of it. But if you don't cancel, then you will have to pay GST on all your supplies. Okay, e-commerce operation. Then we have classification. What is this classification? There is a GST notification which gives classification. So we have to understand this classification. This classification is coming from customs tariff. What is a customs tariff? It says that what are all the HSN codes? Now, HSN code is a harmonized system of nomenclature. It says that we will give you 8-digit codes, 6-digit codes for the products. So 4 digits will have the major component, then 6 digit will have the sub-component. Now I will show you a case of a customs tariff. How does it look? Okay, so we're seeing a customs tariff. This is divided into various chapters. Chapter 1 to chapter 98, chapter 99, chapter 98. Till 98, we have chapters. Chapters means the main headings. Okay, now chapter 4 says this is for dairy products. So if you have to find any rate for dairy products, this is customs tariff. If you have to find the rate for any dairy products or any edible products, then you'll have to go to chapter 4. Then you have chapter notes, which will give you an explanation what are the meanings of certain terms and what are the clarifications. So this is called as chapter. This is called the chapter heading, and these are the chapter notes, which means any kind of specific clarification will be given in chapter notes. Then you have subheading notes, the main notes, then subheading notes. Then you have supplementary notes, then the main tariff starts. In this tariff, you will have first 4-digit HSN code. 0401 will be a common HSN code across the globe for milk and cream products. Okay. So this is one which is globally accepted and globally decided, and they've decided that we will give this classification for this product. So milk and milk products will be there. Then subcategories will be there. Now 100401 is the main tariff code. Then 0401 1000 is the subcode. Now in this subcode, you will see that the description is mentioned, the unit, how do you charge the customs duty is mentioned, and what is the rate. If the standard rate will be mentioned, then preferential rate. This is how the customs tariff work. HSN wise, this HSN is adopted in GST also. So in GST also, we'll see that our classification is given in this manner. Okay. Then how is the GST rates given for goods? Similar to this, you have a notification. In that notification, HSN number is given, then description is given, then the rate of tax is given. So that's how the GST rates on goods is mentioned. Now we'll go to GST rate for classification of services. How is this there? So you have this rate notification number 11. Okay, notification number 11 says that the basic preamble, and then the table comes in. The table says that chapter 99, because till chapter 98 it is for goods and 98 is for services. 98 says all services. Section 5 under 99.5. So main heading, then subheading. The heading will be 99.54, which will be for say construction of complex services. The rate is 9% and the condition is mentioned. So then separate category for composite supply. Again, there is separate rate and then any conditions. Then section 5 they start, then they go with section 6. Section 6 will be on other services, which is distributive trade services. Here again, rate will be mentioned 9. 9 means 9 under CGST. Similarly, 9 under SGST, which makes it as 18%. So this is how you will have to see how you have to find out the rate. You'll have to go to this notification number 11 and see if there is any amendments. Go to the latest amendments and see what is the rate for services. If there's any conditions, like here you will see the rate is 6%. So accommodation, the rate is 6%. 6 plus 6 makes it 12 without any conditions. If they want to give the conditions of non-availing the ITC, then they will mention in this part. So here you see below, you'll find that some places, transportation of passengers with or without accommodation, without accompanied belongings, the rate is 5%, provided that, so wherever they have to give conditions, they'll give here, provided that the credit of input tax credit charge in respect of goods used is not being utilized. So any conditions will be given over here. That's how you have to see the classification for services. Okay. Now service rates, you don't have to know the rates for goods, but even for rate of services, if each classification you don't have to do, but you'll have to understand that how to classify it, and the rates will be given to you in the question itself. The lowest rate is on restaurant services and on food products. The highest rate is on gambling, which will be at 20%. Wherever they don't specify what is the general rate of GST on services, it is 18%. Okay. Now GST rate on housing project. What is the GST rate on housing project? If it is 1% or 5%. So this is the rate which is coming with effective from 1st April 2019. Before that, the rate was 12% and 5%. Now it is 1% and 5%. So 1% for affordable housing projects. So if it is below a certain square feet, then it becomes a small house. They will treat it as affordable housing. So the rate is 1% for new projects which is coming from 1st April 2019. What happens to the existing projects which were there before 2019? Ongoing affordable housing projects opting for new rates. So if they opt for new rate, then it will be 1%. Okay. And for non-affordable housing, which is a big houses, small houses 1%, big houses 5%. 5% when on a ongoing other than affordable housing, new other than affordable housing projects, and project with commercial space less than 15%. The commercial space should be less than 15%, then it will be under this rates. Otherwise, it will be under normal rates of 18%. So if it's a commercial projects, it will be under 18%, but non-commercial projects, it will all be under either 5% or 1%. The important thing is the condition. What condition they say is all your ITC is denied. So if you are a construction company, you have to pay 1% or 5% of the rate. Okay. And if you're paying at these rates, you have to pay compulsory. So there's no option now. You have to pay for all projects from 1st April 2019 on residential projects at 5% and 1% respectively. 1% for affordable housing, 5% for other than affordable housing. And what are the conditions? Your input tax credit will not be available. Your ITC is not there. You have to pay straight 5% or 1%, no ITC. But you have to also ensure that 80% of your inputs, 80% of your purchases is procured from registered person. You cannot say that I am not having ITC, so I'll purchase from anybody I want. No, you have to prove that you have procured from 80% of your purchases are from registered person. Okay. If you are purchasing from registered person, fine. If you're not purchasing, so I gave you a limit. Government has given you a limit of purchase of 80%. So 20% you can purchase from unregistered person. Some in business you may deal with unregistered person. So okay, we'll give you a exemption saying that okay, up to 20% you can purchase from unregistered person, right? So if you are purchasing up to 20%, it's fine. But if you're purchasing more than 20% from unregistered person, then you have to pay tax on that. Why? Because I gave you this low rate with the condition that you have to claim from register. You have to at least buy from registered person. Otherwise, who will buy from my other registered person? Right? So that's why government is giving you a limit saying that 80% Baba you purchase from registered person. If you fall short to the extent of shortages, you have to pay your tax. How much will be the tax? The tax will be 18%. So say I have a project of 1 crore. On 1 crore, I will pay GST at 5%. Fine. Now, how much was your purchases for this 1 crore projects? Say 80 lakhs. Okay. 80 lakhs was my purchases. Now this 80 lakhs, whatever purchases you're making, this 80 lakhs into 80% should be from registered person. 80 into 80% is 64 lakhs. So at least 64 lakhs you should purchase from registered person. And this balance of 16 lakhs can be from unregistered person. So when you do this calculation, you found that instead of 64 lakhs, which is required, only 60 lakhs is from registered person and this 4 lakh is from unregistered person. So on this 4 lakhs, you have to pay GST at 18% under reverse charge. Okay. So this is this 9.4, what we are saying that purchase from unregistered person, it will be a reverse charge, right? So this is that reverse charge under 9.4. When you're purchasing from unregistered person below the limit, then the builder has to pay under reverse charge. Now, if this shortfall is for general purchases, fine. If the shortfall is from cement purchases, see, you bought cement from unregistered person, then you have to pay at 28%. Why is it 28% so high only for cement? Because the rate of cement is at 28%. So if the shortage is for cement, that you have purchased this 4 lakh rupees from unregistered person who has supplied you cement, then your reverse charge will not be 18%, your reverse charge will be 28%. Okay. Affordable houses are defined as any construction having area up to 60 square meters in metros and 90 square meters in non-metros. Okay, so in metros, if you are having 60 square meters, you're treated as a affordable housing, and for both and for non-metro, it is 90 square meter, and the value should be less than 45 lakhs. So two conditions: one is square meter should be less than 60 square meter in metro stations, metro cities, and for non-metro cities, it is 90 square meters. But in both the cases, the value should be less than 45 lakhs. Then it is treated as a affordable housing. So this is purchase for residential purpose or as a contractor. For a contractor, not for a purchase. So it's for a contractor. Then in e-commerce service, are we also liable to pay GST for the e-commerce services provider? No. E-commerce service provider, in case of services, he will charge his GST and he will collect under forward charge itself. So is this reverse charge getting ITC for construction? No, they will not get the ITC. So even if they pay on the shortfall, they will not get the credit of it, because that's a kind of thing, settlement, which they've said that we will charge you, we will let you charge lower rate, but no ITC at all. So if there's a shortfall, it means you didn't purchase, you didn't fulfill the conditions, your purchase from unregistered person, there is a loss to the government, so you pay it, and that credit they will not get. So if a construction company purchases cement from an unregistered supplier, so cement supplier will pay GST, right? No. If he's an unregistered person, then he will not pay GST, no, Shubham. So if they're buying from an unregistered person, then they have to pay under reverse charge. Conditions are for all cases 1% and 5%. Yes, for both the cases, these are the conditions. What is in the case of metropolitan where even for less area, prices are very high? Would that still be affordable housing? No. Irrespective of the prices being high, if it is below 45 lakhs, only then it will be treated as an affordable housing. Even if it is where a metropolitan where the prices are high, still, if you are crossing 45 lakhs, the land can be less. If you're crossing 45 lakhs, you will be treated as non-affordable housing and you will have to pay at a higher rate. Okay. So let's proceed with MCQs on the chapters which we have covered till now before we go to composition scheme. Which of the following are treated as an interstate supply? Very simple. Okay. First one, everybody is saying correct D, all of the above, not only A, it is D. So the correct answer is D. Second scenario. Sorry. The correct answer is D. Exempt supply means supply of any goods or services or both which attracts nil rate and wholly exempt under section 11 or section 6 of the IGST or non-taxable supplies, both A and B or none of the above. 2, the answer is C. Correct. Because both A and B is covered under exempt supply. So exempt supply means nil rate of tax or wholly exempt. So if the rate is nil, that is also exempt, or the rate is there, or the values are there, but it is given through an exemption notification, like how we have seen notification number 12. There is an exemption notification. So in that, if it is mentioned as exempted, then also it is exempted, or non-taxable supplies, because the definition of exempt supply includes non-taxable supplies. So non-taxable supplies are also covered under the definition of exempt supply. Okay, this I had made a mistake. And third one, what is the case? CGST Act 2017 and IGST Act extends to which all locations? Third one, A, whole of India. So it doesn't exclude Jammu and Kashmir, it is whole of India. Fourth one, which are the following falls under reverse charge mechanism under GST? Supply of services by a GTA, supply of services supplied by arbitral tribunal, services provided by way of sponsorship, or all of the above. Correct. All of the above, because all of this falls under reverse charge mechanism. Which of the scenarios fall under the scope of Schedule 3? Third schedule is what? Where there is not it treated as non-supply. Which of this will fall under Schedule 3? Whether it's director remuneration, which is declared as salaries, subject to TDS under 192, or director's remuneration declared and subject to salaries in the books of account, other than salaries in the books of account and subject to TDS under 194J, both A and B are none of them. One C, B, no. It is only this. Schedule 3 says employer-employee relationship, and here employer-employee relationship is only in case of A, because it is employer-employee relationship and shown in the books of accounts, and TDS gives an evidence, right? So only scenario A is covered. The correct answer is A. Many have given B, but no, the correct answer is only A. Okay. Now let's move to the concept of composition scheme. So before taking the composition scheme, do you want a break now, or how do we do? So I think it's better before we start a concept, we'll take a break. So we'll take a break of around 5 to 7 minutes, and we'll start the composition scheme. Okay, break time now. Okay, so we discussed on reverse charge in detail. Now let's get into the next concept, which is composition scheme. Okay, so what is a composition scheme? As we had briefed earlier, anybody who is doing any kind of supply of goods or supply of services has to register under GST. Right now, uh, a small trader will say that I have to register under GST, collect the taxes and pay it. So it's not possible for me. So I will not register, or he'll say it's very difficult for me to comply. So that's when this composition scheme is introduced. This scheme is saying that if you're a small trader, you're a small manufacturer, you're a small service provider, then we will give you a special scheme called as composition scheme, and you don't collect tax from your customers. That's the important thing. You can, in a normal scheme, you can raise an invoice and collect tax from your customers, but in a composition scheme you cannot collect tax from your customers. You will have to pay from your own pocket. So if you're paying from your own pocket, then don't ask us for ITC. You will not get input tax credit. Pay the small amount and done away with it. No more questions asked. Just declare your turnover correctly and pay taxes on it. No judgment of claiming input tax credit and things like that. This is a special scheme. So when we say special scheme, whether everybody falling under this small category, will they have to comply? No, not everybody. It is not a compulsory thing that everybody under this small trader category has to come under the scheme. There's an option given. If you want, you fall registered under normal scheme, charge from your customer, collect it, claim input tax credit, and do the normal thing. Or if you don't want to do that, then you have this option of composition scheme. Okay, so this is an option. This is not a compulsion, firstly. And second is you cannot collect from your customers. You have to pay it from your own pocket. Now, composition scheme are also divided into composition scheme for goods and composition scheme for services. So there are two schemes available, one for goods, one for services. So if it is for goods, then on whatever sales you make, if you are a manufacturer, then your rate is 1%. And if you're a trader, then also the rate is 1%. If you are a restaurant service provider, then it is 5%. Okay. So if you are under composition and if you are a restaurant service provider, it is 5%. If you are under composition and under regular scheme, still it is 5%. So what will you opt? You will opt for regular scheme. Why? Under regular scheme, you can collect from your customer. Under composition scheme, you cannot collect from your customer. So that's why you would have seen that there is in the news that if you go to any hotel, see their GST number, go to GST portal and find out whether it is composition scheme. If it is composition scheme, then they cannot collect taxes from you, right? So that is true. But if these restaurant service providers, you take the GST and search that they are not under composition, they are under regular scheme, then what happens? They can collect taxes from you. At what rate? If same 5%, here also it's 5% itself. So restaurant doesn't make a difference and doesn't make a sense for them to go under composition. So let's go into the regular people then. Manufacturer and trader. Manufacturer also 1%, sir. Trader also 1%. Yes, both 1%. What is the difference? Manufacturer is 1% of the turnover in the state. Means whatever is the turnover in the state. For trader, it is 1% of the turnover of taxable supply of goods and services. Here it says only turnover. Here it says only turnover. Yeah. So for manufacturer, it says just turnover. But for trader, it says 1% of the turnover of taxable supply of goods and services. It means what? That the general definition of turnover includes all turnover, taxable, non-taxable, exempt turnover, whatever they do. On whole of their turnover, they have to pay. Sir, if it is exempt and if he's under composition, why should he pay? Because the term says turnover, even if he's making exempt supply, on that also he has to pay 1%. Carefully use the words saying that 1% of the turnover for a manufacturer and 1% of the turnover of taxable supply of goods and services in case of a trader. Okay. So in case of a trader, it will be only on taxable supply. If he's making any exempt supply, no GST. But if the same manufacturer is supplying exempted goods, on that also he has to pay GST at 1%. Okay. So 1% manufacturer on total turnover. For a trader, it is only on taxable turnover. And restaurant service provider, 5%. And composition scheme for services. Okay. Other service providers, which means restaurant service is also service. There it is under 5%. But other than restaurant service, all other services, it is at 6%. 3% CGST, 3% is GST, 6% is the rate for composition scheme for services. Now, what are the finer points in this? This is a voluntary and optional scheme. No kind of a compulsion that you have to fall under this. If you want, come under this. Otherwise, go under regular scheme. Benefits. What are the benefits? Quarterly payment of taxes at specified rate, right? They have to pay only quarterly. They don't have to pay monthly taxes. They have to pay quarterly taxes and file one annual return. But this payment, what they make, they cannot claim the input tax credit. So this ITC will not be available to them. So quarterly payment of taxes at specified rates without claiming the input tax credit. Turnover limit. What is the limit up to which I can go for composition? Aggregate turnover calculated on all India basis up to 1.5 crores in the preceding financial year. So if I have turnover up to 1.5 crores in the preceding financial year, in the present year up to 1.5 crores, first is if my turnover in the preceding year is more than 1.5 crores, then I cannot get into the scheme at all. So my turnover in the preceding financial year should be 1.5 crores, and I will be in this alive in this composition scheme up till 1.5 crores. So if I cross 1.5 crores, then I am out of this composition. But in case of 8 special category states, wherever this 1.85 crores is there, it will be reduced to half. Now, what are these special category states? Somebody was asking, how do you remember the special category states? I have an acronym TNMM. TNMM, the famous author of direct tax, T.N. Manoharan. Take his name, TNMM, SUMA. What does TNMM stands for? T stands for Tripura, N stands for Nagaland, M for Mizoram, and M for Manipur. So TNMM, SUMA. What is SUMA? Sikkim and Uttarakhand, not Uttar Pradesh. Sikkim and Uttarakhand, and Meghalaya and Arunachal Pradesh. That's how I remember this 8 special category states. I will repeat: T for Tripura, N for Nagaland, M for Manipur, M for Mizoram, S for Sikkim, U for Uttarakhand, M for Meghalaya, and A for Arunachal Pradesh. Okay, so mostly these eastern states, okay, these northeastern states are all covered under this special category states. For them, the threshold for this composition scheme is 75 lakhs. So if you are touching 75 lakhs in the previous year in these states, then you will have to register under regular scheme. You will have to opt out of this composition scheme. Okay. And for services, for all states, there's no classification between special category states and non-special category states. If you're a service provider up to 50 lakhs, you can opt for composition scheme. If you cross 50 lakhs, then you will come out of the composition scheme. Clear? Now, how do you calculate the aggregate turnover? For calculating the threshold, first is to calculate the threshold. Firstly, it has to be computed on all India basis, and not only on your state. So if you're having registration in Karnataka, registration in Tamil Nadu, each state 1.5 crores you will not get. Overall 1.5 crores you have to see. If you are below 1.5 crores in all the states, okay, then only you can opt for composition. If you are having 1.5, say 60 lakhs here and 90 lakhs in, say 1 crore in Tamil Nadu, 60 plus 1 crore makes it 1.6 crores, you are out, you cannot opt for composition. So you have to see the threshold on all India basis, not for each state. What all you have to include for this aggregate turnover? You have to include taxable supplies. You have to include exempt supplies. You have to include exports. and you have to include interstate sales. So all your taxable supplies, all your exempt supplies also have to include for calculating the threshold. Because if I'm falling under the threshold, only then I can pay. If I have crossed the threshold, I cannot get into this scheme. So to calculate this aggregate turnover, all of this taxable supplies, exempt supplies, all your exempts and interstate supplies, all has to be included. What is to be excluded? Value on inward supplies on which you pay reverse charge. Why? Because it's your inward supplies, you're paying outward, you're paying the tax, but don't include it. Okay, so value of inward supplies is not included, and taxes including cess which is paid. So whatever taxes you're paying, that also need not be included. Only the value of the goods is to be included. Explanation to section 10 says includes value of supplies from 1st April of the financial year up to the date of becoming liable for registration. So you cannot say that if I've started in between the year, I'll get a full limit. No, it includes our in between. If you change the scheme, will it happen? No, it includes the value of supply from the 1st April of the financial year up to the date of becoming liable for registration. Because say you have started business and your turnover is 5 lakhs, registration not required, you have not taken. 10 lakhs next month, you have not taken. But when it crossed 20 lakhs, you have to compulsory register. When I crossed 20 lakhs in say in the month of June. So from the date of registration, you have to calculate? No. From the date when you started business or from the turnover from the 1st April of the financial year, you have to consider. Okay. And important thing, it excludes the value of interest or discount on deposit, loans or advances. So any interest, whatever you get or any discount you get on your deposits and interest, because interest and deposits are exempted under GST. So that exempted you should not include. Here we have said exempted is to be included. All exempt you will include, but special thing is all this interest, whatever you're getting, that you should not include. Okay, so this is the aggregate turnover for threshold. What is annual return, sir? One return which they will file on an annual basis is called as annual return. So every other registered person has to file a monthly return. Okay, he has to file his monthly returns in GSTR 3B and GSTR 1. But this composition person has to file this annual return once in a year. So if you pay, how we claim ITC in composition? In composition, Yashika, you cannot claim ITC. You cannot claim because there is a restriction. Any person who's charging your GST, that will be a cost to you. You cannot claim the ITC. So if you pay from our pocket and claim your ITC, then what is the benefit? The benefit is you don't have to charge invoice. You don't have to keep track of your outward supplies, your collection. You don't have to track your input tax credit. That you don't have to do. Okay, you're just when the rate is very less. If it is 18%, you have to collect 18% from the customer and thing. Here you don't have to bother whether the customer pays you the tax. If he pays you the value of the goods, that's sufficient. You pay from your pocket the rate of 1%. If there is a supply of non-taxable supplies, there will be a charge. Yes, non-taxable supply is included in the exempt supply. So on that also there will be a charge. Clear till now? What is exempt supplies? We read that FAQ, no? MCQ. Exempt supply means those supplies on which the rate is 0 or there is an exemption notification, and it also includes non-GST supplies. Okay, non-GST supplies are also included, and exemption wherever there is a exemption given to goods or services, that is also a exempt supply. Okay, sir, explain the point on turnover from 1st April to the date of registration, sir. Right. Take a scenario that I have registered, I have started my business today. We are in June. My turnover for this whole year was, say, from this month till March 2023, it is 18 lakhs. So should I register? I should not register because the value is below 20 lakhs. I don't have to register. Now next year, I will not register. This year I didn't register. Next year, April, it is 5 lakhs. May, it is 4 lakhs. And June, it is 3 lakhs. 543. It makes it as 5 plus 4, 9. 9 plus 3 makes it at 12 lakhs. Now, in July, my turnover is crossing to 8 lakhs. So it becomes 13. Okay. 5 plus 4, 9. 9 plus 12. 12 plus it becomes 10 lakhs. Okay. So April, May, June, it is 12 lakhs. In July, it is 10 lakhs. So 12 plus 10 makes it 21. So as soon as I cross 20 lakhs, I have to register. So at that point of time, I will decide that I have to register. I will register under composition scheme. So when I register under composition scheme, the turnover for the purpose of calculating the aggregate turnover for registration, I'll have to calculate from April 1st, not of the previous year. So this year's turnover, I don't have to include. I'll have to include the turnover for calculation of aggregate turnover, that it should be below 1.5 crores from the 1st of April. From the 1st of April, it is 21 lakhs, which is below 1.5 crores. I am eligible. Okay, because if it crosses 20 lakhs suddenly from 1st April, and say this year also you calculate, then if you aggregate, it will go a big amount. So they're saying that you don't consider the aggregate of all your previous years when you were not registered. That year is closed that year. You'll have to consider the turnover from 1st April in the year when you're taking the registration. Okay. If government is receiving only 1 and 5%, what's in for the government? For the government, it's benefit because they want to give benefit of real estate business, and the benefit is the ITC is not claimed, so that ITC is coming to the government. Like a supplier of cement, he supplies to the real estate company. If they were under normal scheme, they could have claimed the credit. So this 18%, the 28% cement rate, they have to pay it back through that input tax credit chain, right? So now they don't have to pay under that 5% and 1% scheme. Please explain excludes. Okay. It excludes value of inward supplies on which tax is payable under reverse charge. So under reverse charge, who is paying? Receiver, right? So for my threshold calculation, should I include this also? They're saying clarification. It is your inward supplies on which you are paying tax. So all your inward supplies also don't include. Okay. Inward supplies you don't include, and tax including cess. Whatever the value of the tax, whatever is the value of the cess, because when you sell 100 rupees, you'll sell including tax at 118. So will you consider your turnover are 118 or 100? You have to consider 100, and you should not consider this 18 is what they are saying. Sir, what if after opting for composition scheme, our turnover exceeds the threshold limit? Yes. So threshold limit is 1.5 crores. You have opted for composition. You are paying taxes at 1%. Now you have touched 1.5 crores in December. What will happen? Will you have to convert to regular? Yes, you have to convert into regular because this threshold is 1.5 crores. You have made a good business. Very happy. You will get converted to a regular scheme. So taxes you will pay at regular rate on the products. If the rate is 12%, you will pay 12%. But from what date? Will it be from the first day of April till December? No. From 1st April to December, you were under composition. So continue that composition from April to December. From 1st of January, your turnover is increased. So from 1st of January, whatever sales you make, on that you pay the regular tax and claim the input tax credit also. You need to include cess for threshold limit. No, you don't have to include the cess for threshold limit. That is what, no, even for threshold limit, you will not include. Okay. So we understood the aggregate turnover. Now, on what value you will pay GST? turnover in a state or union territory computed on all India basis having the same PAN. Okay. So on what value you will pay? On the value of taxable supplies, on value of exempt supplies, but not for trader. I'm just doing a comparison between this sheet and this sheet. Here we said that there are 4 supplies for aggregate turnover. On whether on all turnover you'll pay? No. Only on taxable supplies you'll pay if you're a trader. If you're a manufacturer, then you'll pay on your taxable supplies as well as exempt supplies. Why? Because the manufacturer definition says on total turnover. So taxable supplies and exempt supplies you will pay for a manufacturer, but for a trader you'll pay only on taxable supplies. On export of goods also will I pay? No, because export of goods is considered as zero rated supply. On that you will not pay. And on any interstate supplies also you will not pay. Why you will not pay on interstate supply? Because the conditions for registering as a composition says that you cannot make any interstate supplies. That's why we excluded that also. The condition says that if you are making any interstate supplies, then you cannot opt for this composition. Okay, and all this exclusion is there and everything applies. But basically, what point I want to make is the tax will be paid on taxable turnover for a trader, and it will be paid on taxable turnover and exempt turnover for a manufacturer. Okay. Now the conditions. What are the conditions, or who is not eligible for this composition scheme? Person making any supply of goods or services which are not leviable to tax. If some goods are not leviable to tax, I am doing only exempted goods, then I cannot opt for this scheme. That's very clear, because if I'm trading in any goods, persons making any supply of goods or services which are not leviable to tax, they are anyways not paying any GST, so you don't take registration under composition scheme. Fine. Then person making any interstate outward supply of goods. If I am making any interstate, even small value of interstate, no, you cannot opt for this composition scheme. Person supplying goods or services through an e-commerce operator who is required to collect TCS. Okay, person supplying goods or services through an e-commerce operator who is required to collect TCS. If you're supplying goods through an e-commerce operator, then also you cannot opt for the composition scheme. Okay. Then manufacturer of ice cream, pan masala, tobacco, and aerated water. A manufacturer who is manufacturing these products, ice cream, pan masala, tobacco, and aerated water, you cannot offer this composition, because there, if you tell 1%, that will not work out. That will become a loss to the government. That's why they've said these 3-4 people. If you're a manufacturer of ice cream, pan masala, tobacco, and aerated water, you cannot opt for composition scheme. A casual taxable person, we understood now that if I'm going to another state and registering, so I'm going to another state, my turnover will be less than 1.5 crores. So I will register for casual taxable person and pay 1% and come off. No. If you are a casual taxable person, you will not get the benefit of composition scheme. If you are a casual taxable person, you have to pay the full rate on the value of the goods. You will not get the benefit of composition. And there is one more category of person called non-resident taxable person, which means a person who is not resident in India, a foreigner coming to India to do any business and going back, right? If he's coming here and staying regularly, then he'll go for regular registration. But he's a non-resident and he's come here for temporary business. In that case, also, he cannot opt for composition scheme. He will have to go for regular scheme registration. And other thing is, he has to pay tax under this 9.3 or 9.4, which is reverse charge. So reverse charge, what we said, okay. Now we have said that your turnover is small, so you pay 1%. So can I say that on reverse charge also you pay 1%? No. On reverse charge, you'll pay regular rate. And if you're taking any lawyer services and you're registered under composition, because one category was registered person also there. So if you're registered, then you have to pay tax under reverse charge. You cannot say that I am a composition person, so I'm getting benefit of 1%. So reverse charge I will not pay. No, reverse charge you have to pay. And supplier of services subject to margin supply of service, right? So this margin supply of service, I'll tell you, because if you're a trader, you have to do only trading of goods. Now, will you be able to do services? Yes, you can do some marginal supply of service, is what they're saying. Otherwise, if you're doing goods and services both, you cannot offer this composition. You should be a pure trader, or you should be a pure service provider. There should be a pure manufacturer or pure service provider. But some point, some little services if I'm doing, earlier it was all getting off, saying that you're doing some little service also, you cannot offer this composition. But now, if you're doing some marginal supply of service, you can still claim the benefit of this composition. What is this marginal service? Service value not exceeding 10% of the turnover in the state or union territory in the preceding financial year. So 10% of the turnover of the preceding financial year or 5 lakhs, whichever is higher. Either of this, you can do it. So you cannot do beyond it. So they have said that, okay, you're a trader or you're a manufacturer. Okay, we will give you a limit saying that up till this limit, you can do supply of services, no problem. Now, what is this limit? This limit is 10% of the turnover or 5 lakh, whichever is higher. Even in this calculation, interest on loan deposit advance will not be taken into consideration. Okay. Composition dealer in his invoice, he will not give an invoice because invoice will be given by tax invoice will be given by person who is charging tax. A composition person is not collecting tax, so he will not give a tax invoice. He will give something called as a bill of supply. Okay, so the composition dealer will issue a bill of supply instead of invoice and shall mention that he is a composition taxable person not eligible to collect tax on his supplies. He has to mention in his invoice. And he should mention in all his registration certificates or on a board, whatever he puts outside. Generally, you have to put GSTN, but this composition taxable person has to mention GSTN and he has to mention composition taxable person. Okay. But if product is supposed to be levied at 18%, 18% to 1%, yes, the benefit is a person who is paying 18%, he will pass that to the other person and he will claim the credit. But this 1%, he cannot pass on the credit. So if I'm a buyer who I am buying from the composition person, I cannot claim the credit. Okay, it's not only that he cannot claim the credit, but the person, I am not paying the tax to him, right? Because he has to pay tax from his own pocket. So I cannot claim the credit of that anyways. If I'm having a bill of a composition biller, it will only mention the value of the goods. And I cannot claim the credit of that definitely. So it's more benefit to the government because that 1% is finally going to the government and it's not passing in the chain. Clear? Sir, inward supply is excluded. No, so why outward? What is your question? Inward is excluded. Yes. Outward, yeah. On outward, he has to pay. Why ice cream and aerated water? There, the margin will not fit in. On that, if they give 1%, that ratio doesn't work. It works for other goods, not for these ice cream and aerated water. That's why it's excluded. Okay. A person who is not eligible for composition scheme for services, we saw that conditions for not eligible for composition scheme for goods. Right. Now we'll see what is a registered person who is not eligible for composition scheme of services. Person making any supply of goods or services which are not leviable to tax. So if he's providing any services which are not leviable to tax, he cannot opt for the scheme. Person who is making any interstate outward supply of goods or services. So he cannot make any interstate outward supply of goods or services. Person supplying goods or services through an e-commerce operator, fine, manufacturer of ice cream, casual taxable person, and he has to pay tax under 9.3 and 9.4 on his inward supply. Similar conditions of goods. Okay, we understood the marginal supply of services, wherein as a supplier of goods, he can do marginal supply of services. But a supplier of services opting for composition, he has to do only services. He cannot do any value of goods. There is no marginal supply of goods kind of a thing, not there. A supplier of services, a chartered accountant, if he's opting for composition, can he do some part of trading? No, he cannot do. He should do only supply of his services. And that too, that should be less than 50 lakh rupees. Now, intimation for opting for composition scheme. When will you intimate? If you are a new registration, you will apply in the registration. There is an option that whether you want to opt for composition. Yes. If you opt, the effective date, you will get it from the date of registration, right? For an existing registration, if you have an existing registration, now you want to shift from normal registration to composition registration, then you have to file intimation electronically and provide the statement of stock within 60 days of the financial year. Why? Because when I was there under normal scheme, I was claiming all the input tax credit. So whatever stocks are there with me, on that I have claimed all my input tax credit. So when I'm opting for composition, on that input tax credit which are lying in the stock, I have to pay the government back because I claim the credit, the assurance that I will pay tax on my outward supplies. Now, when you have opt for composition, moving to composition, then on that stock you declare the stock, and that you will have to reverse the input tax credit and pay it. What will be the effective date? The effective date will be the beginning of the financial year, which means what? If you are under regular scheme, if you want to move to composition scheme, you have to move it only at the beginning of the financial year. You cannot do this in between the year. So if you opt for regular scheme and you want to move to composition, you cannot do it in between the year. You have to do it only on 1st of April, which means you have to do it before 1st of April. Then it will become effective from the 1st of April. You cannot opt it anywhere in between. So why fly ash based building blocks of fossil meals and similar e-commerce is not covered? Is it applicable for May 2023? Yes. It is applicable both for May 2023 and November 2023. So apart from this products, what I was discussing, manufacture of ice cream, pan masala, tobacco, fly ash bricks, building bricks, and fossil meals are also not included. That is an amendment. What would be the example for marginal supply of services? So if I am a supplier of air conditioner, right? I am doing, we understood that composition scheme is there, composite supply. Composite supply and mixed supply is there, that whatever services of fitting you're doing, that is coming under main thing. Now, once you have supplied the air conditioner, some people will come you for repair services or providing AMC services, right? So there, if you're doing any kind of services, say small value, main value is supply of this air conditioner only, some small repair work you're doing, then they're saying, okay, up to 10% of your previous year's turnover, we will permit you to do this small service value also. So that's an example of marginal supply of services. Please explain intimation again. Example of intimation, yeah. So I am there. I am a trader of goods. I am trading in the goods. I am doing business regularly. My turnover is, say, 80 lakhs, below 1.5 crores, but I opted there for regular scheme itself. Now I'm doing turnover for 1 year, 2 year. Now third year, I thought, see, my turnover is anyways below 1.5 crores. And my friend has told me that I can opt for composition. So I will opt for composition now. So in June, I decide that I want to go for composition. Can I do it? No, I cannot do it, because this option of intimating for opting means I will have to inform the department that I am opting for composition. So I will intimate them and then only go for composition. It's not that whenever I want, I can do it. I'll have to intimate the department and then do it. So I am in this June, I cannot do it. I want to opt for composition, I cannot do it. I'll have to intimate by next year, January or February, saying that from 1st April of the next year, I will opt for composition. So this is the option of opting for composition. I cannot do it in middle of the year. Just beginning of the next financial year, I can intimate the department, and whatever is the stock lying on 31st March, I have to take it and report it and reverse the ITC on that. And from 1st April 2024 onwards, I can opt for compositions. Sir, how about delivery of goods? Would this be marginal service if fee is charged for delivery? Yes, this will get covered under this marginal service. If you're collecting fees, then this is a separate service. This will get covered under this marginal service. Up to 10% of the value of the previous turnover, you can do this service. Okay. Validity of composition scheme: withdrawal by a tax person who ceases to satisfy any prescribed conditions. So if you're not satisfying any of these conditions and you want to come out of this composition scheme, then you have to file an intimation within the 7 days of occurrence of event. Means what? Up to 1.5 crores we said. Now 1.5 crores is crossed. As soon as this as soon as this limit of 1.5 crores is crossed, you have to opt for this regular scheme. When you should intimate, once your turnover crosses 1.5 crores, then you have to intimate within 7 days. What could be the other event? There is a restriction that you cannot make any interstate supply, but you had your customer and you had to make an interstate supply. You have made it. It means you are out of this composition. You have to inform from the date of that sale within 7 days. You have to inform and say that you are going out of this composition. So that if say on 25th of June, I've made an interstate supply. So from 25th, I am not under composition. So you have to intimate it, and from whatever sales you're doing from 25th onward, you have to charge regular GST on it. So you have to intimate and convert your composition scheme to regular scheme. So conversion from regular to composition starting of the beginning of the year starting date, but moving from composition to regular can be done anytime, because you have to give some conditions that you are not able to fulfill the composition scheme. Then you have to pay regular tax for every taxable supply thereof. Effective date of withdrawal shall be the date of intimation mentioned, but it has to be present year, cannot be previous year. Current year only you can change it. Last year's you have to change it last year itself. Okay. Withdrawal of a tax by a taxpayer who intends to withdraw from the said scheme, file an application before the date of such withdrawal, and effective date of withdrawal shall be the date of intimation mentioned, but it has to be again present year. So this is if you're ceasing to satisfy the condition, and this is when you voluntarily want to move out of the scheme. So two schemes are possible. Then denial of option by taxpayers, where the tax officer has reason to believe that the person is not eligible for composition levy or the person has contravened the provisions, then the officer can deny this composition scheme when at the time of intimation or any time in between the year. In both the cases, they can deny it. How he will deny? First, he has to issue a show cause notice. What is a show cause notice? A notice saying that I want to cancel your composition scheme, or if you have applied and I want to deny it. I'm an officer, I want to deny you this composition scheme. To deny the scheme, I have to give you a show cause notice. I have to show cause you. I have to give you an opportunity to say that I am denying it to you. This opportunity is called through a document called as a show cause notice, because anything which I'm doing against you, I have to give you an equal right to tell me what you have to say. That's why I have to give you a show cause notice and you have to reply. Now this reply is to be filed by the taxable person, because I gave you a right. Now you cannot keep quiet. You have to reply to this. So you have to file a reply. Then officer to pass an order, either accepting the reply or denying the action to pay. So if I have opted for composition, I'll make an application. Officer will deny it. Before denying it, he has to give a show cause notice. If he gives a show cause notice, I'll give him a reason. If I give a reason and he accepted, fine, he will give me the approval for composition. If he does not give, then he will reject it. Okay. What will be the effective date of composition cancellation? Effective date from a date which can be retrospective date, which will not be before the date of contravention of the provision. So if I made any contravention of the provisions of the Act, then not only this date, they can take from the date you have contravened the provisions of the Act, from that date I will deny. What is the impact? Whatever composition scheme I've paid, that they will earn GST rate, and reduce the rate of composition what you have paid. Okay. In all the three cases, whether I go for composition cancellation, whether the officer goes for cancellation, I have to furnish a statement within 30 days from the date of withdrawal, a statement of stock held. Why? From the date of moving of composition and I'm going to the regular scheme, then I can claim the credit, right? So I have to give a stock statement of what is the stock I hold as on the date of composition. Sir, when taxpayer does not satisfy the condition, then he voluntarily moves out. Yes, he can voluntarily move out. So, sir, withdrawal can be compulsorily, voluntarily, and by order. Very good. Yes, all three is possible. Okay. So this is all is the composition. In nutshell, let me explain. Composition scheme is a scheme wherein it is given to small traders up to 1.5 crores turnover. You can opt for composition. Your previous turnover should be less than 1.5 crores, and this year also it should be less than 1.5 crores. What is the rate you pay? If you're a manufacturer, 1% of the total turnover. If you're a trader, 1% of the taxable turnover. And there is a scheme for composition scheme for services. For services, it is 50 lakhs. If you are up to 50 lakh rupees, you can opt for this composition. What is the rate? In case of services, it is 6%. In case of manufacturer and trader, it was 1%. In case of service provider, it is 6%. Okay. What are the conditions? Conditions is you cannot make any interstate supply of goods or services. Input tax credit you cannot take. The customer also cannot take input tax credit. You have to pay taxes from your own. You cannot collect taxes from your customer, and you have to mention in your invoice you will not issue. You will issue a bill of invoice, mention your GST number, and mention that composition dealer not liable to collect taxes. And on all your notice board, wherever you're mentioning your GST, you have to mention you're a composition taxable person. Okay, so that was composition scheme. Okay, let's get into some questions here so that we understand this much deeply. Mr. A is running a consulting firm and also a ready-made garment shop. Okay, so in this case, let me first hide the answers, otherwise it will become really wrong. Okay, Mr. A is running a consulting firm and also a ready-made garment showroom, which are registered under same PAN. Now, turnover of the showroom is 102 lakhs and receipt of consultancy fees is 24 lakhs. Whether Mr. A is eligible for composition scheme, whether there is any difference if Mr. A wants to opt for composition scheme for showroom. Okay. So whether Mr. A is first of all eligible for composition scheme. The answer is aggregate turnover includes all supplies by a person registered under single PAN. Exempt supply is included in the definition of aggregate turnover and non-taxable supply is included. Hence, non-taxable supply is also included, but service providers are not eligible for composition. So here he is not eligible because he is providing services. Now we have this marginal scheme. Marginal scheme says up to 10%, but he's making services of 24 lakhs, just beyond the 10% limit. So he cannot opt for composition scheme. Now the second question is whether there is any difference if Mr. A wants to opt for composition only for showroom. So he's saying, okay, only for showroom sales, I'll opt for composition. For my services, I will not opt. Can he do that? Mr. A is providing services in consultancy firm, hence he is not eligible for composition. If a business is ineligible to opt for composition, then all other business registered under the same PAN shall automatically be ineligible. So if Mr. A is not eligible for composition scheme, only for showroom also. Important thing. So can I say that I am having two registrations, one for trading, one for services? For trading, I will do composition. For services, I will not do composition. No, not possible. If you are opting for composition scheme, all your businesses should be under composition. You cannot say that one business composition, one business non-composition. Not possible. In case a manufacturer has split his business into two to keep the turnover below the threshold, what such a business be taken as one unit for taxability? Yes, it will be taken as one unit. It will not be treated that separate registration. We'll have to see the turnover all across span, and he cannot opt for composition for one and regular for another. If he's opting for composition, all his businesses should be under composition. Why is there a limit for service provider of 6%? Because service providers will be having less turnover. That's why there's a less turnover of 50 lakh rupees. Okay. Next, in the same example, if instead of consulting service agency, Mr. A is running a restaurant, whether he is eligible? Yes. In that case, he is eligible because restaurant service providing services, there is special rate, right? So if he's doing turnover of trading and he's doing restaurant service, then he is eligible for composition. So that exemption exclusion is only there for restaurant services. If the turnover of garment showroom is 140 lakhs in the preceding financial year and there is no consulting firm, then whether he is eligible? Yes, then he is eligible because his turnover is less than 150 crores and he's not doing any services, then it is possible. Next question, Mr. A is obtained a registration of casual taxable person to make a display in exhibitions. His turnover from the exhibition is 15 lakhs, less than 1.5 crores. Whether he can opt for eligible for composition? Mr. A is not eligible for composition. Composition as casual taxable person are specifically excluded from composition scheme. So composition taxable person, he should not be doing a casual taxable person. A casual taxable person cannot opt for composition scheme. Can the composition scheme be availed if the taxable person has interstate inward supplies? Okay, can the composition scheme be availed if the taxable person has interstate inward supplies? Yes, because the restriction is on outward taxable supplies. He cannot do any interstate outward taxable supplies. But inward supplies, he can do any interstate. No problem with that. Next question. Mr. A is registered in Rajasthan, who is selling goods from Rajasthan to Gujarat, which means he's doing interstate sales. Here only you should have a catch. He's doing turnover from Rajasthan to Gujarat. Turnover is 73 lakhs in the preceding financial year. Whether Mr. A is eligible for composition? He is not eligible because he is making purchases. Yeah, this is the answer. Mr. A is not eligible for composition as he is making interstate outward supplies. Now, the second part of this question is whether your answer will change if Mr. A is making purchases from Gujarat and selling goods in Rajasthan. Mr. A is making purchases from Gujarat, and then he is eligible because he can make interstate purchase, but he is making sales only in Rajasthan, which is intrastate supply, is eligible. Now, next question is Mr. A is non-resident taxable person is running a ready-made garment showroom in Rajasthan. Turnover of the preceding financial year is 70 lakhs. Whether he is eligible to opt for composition? Yes, he is eligible to opt for composition. This is a general answer because if the turnover is less than 1.5 crores, but it is no because a non-resident taxable person and a casual taxable person cannot be given this benefit of composition scheme. Okay. Service provider limit is applicable to those only who are purely engaged in supply of services and not to those who are dealing with partly services and service of goods. Correct. The service provider limit of 50 lakhs is applicable only to pure service providers. Sir, for services to be under composition scheme should be up to 50 lakhs and for goods 1.5 crores. Correct. If a customer buys goods from a supplier who is registered under composition scheme, then customer will have to pay less rather than purchasing from a supplier who is not registered under composition scheme. So it's not fair. No, the costing will vary, no, because a composition scheme, the purchase seller, he will not get his input tax credit, so he will increase his costing. But a regular person, he will reduce his volume because he's claiming credit. So the costing there differs. So for services to be under composition scheme should be 50 lakhs and both 1.5 crores, correct? Okay. Next part of the question. Mr. A is a dealer who is selling goods which are leviable to GST, exempt goods and non-taxable goods. His turnover in the preceding financial year was 110 lakhs, 20 lakhs and 30 lakhs respectively. It means 110 was leviable to GST, taxable goods, 20 was exempted goods and 30 was non-taxable goods. So will he be eligible for composition? 110, no, less than 1.5 crores, so we can say he is eligible. But no, you'll have to consider the aggregate turnover. 110 plus 20 plus 30 makes it as 160 lakhs, which is 1.6 crores. Since it crosses 1.5 crores, he cannot opt for composition scheme. I'm giving you answers here because this will be simple question and answers. A little complication will be given for you in exam, but keep this basics clear that you will have to calculate the turnover on an overall basis. All your exempt turnover, non-taxable turnover, all of that has to be included. Okay. Mr. A is selling goods from through e-commerce operator. Turnover of the preceding financial year is 71 lakhs, which is less than 1.5 crores. Whether he is eligible for composition, again, no. Mr. A is selling goods through an e-commerce operator since he is not eligible for composition. Mr. A has two establishments. Now understand this example very clearly. He has two establishments, one in Uttarakhand and one in Rajasthan. The turnover, now Uttarakhand is a small special category state. There the limit is 75 lakhs. And for Rajasthan is non-special category state. There it is 1.5 crores. The turnover in Rajasthan is 60 lakhs and turnover in Uttarakhand is 30 lakhs. Now he wants to opt for composition scheme. Can he do it? See, the turnover both put together is 60 plus 30, 90 lakhs. The threshold for Rajasthan is 1.1 and Uttarakhand is 75 lakhs. And Uttarakhand turnover is also less than 75 lakhs. Can he opt for composition? What do you think? My answer is no. But what is your views on this? I'll give you my reasoning, then you think over. I'll give you some time. Since his aggregate turnover for the previous year on his PAN basis was more than 75 lakhs, therefore he cannot opt for composition for the state of Uttarakhand. So he cannot opt for Uttarakhand. Now we know that a PAN person who's having one PAN having multiple registrations, he cannot take composition in one state and regular in another state. He has to take composition in all the states. So for Uttarakhand, if he takes composition, first of all, he cannot take because aggregate turnover is more than the threshold for that state. Even though for other state, it is different. For this state, he cannot opt. So if he cannot opt for Uttarakhand, then he cannot opt for composition in Rajasthan also. So he cannot offer composition even though his turnover is 1.5 crores, less than 1.5 crores, because he is having one office in a special category state. So I can say that my turnover in this state is less. Why are you including that turnover? No, this state is not eligible because that state you are not eligible. So this state also you will not become eligible. Okay. So this is clear. This was the important question which I had to emphasize here. Okay, now let's get into MCQs. Which of the union territories has its own legislatures? Before MCQ, any question till now? What if he has registered them under different PAN numbers? How can he register under different PAN numbers? One person will have only one PAN. One company will have only one PAN. Can't be under different PANs. It's possible under different PANs if it's a proprietor and another proprietor, like his family member, is having another PAN, then it's fine. So each PAN is different. Only then it's possible, but not in case of a companies. Okay, so let's get into MCQs. Which of the union territories has its own legislatures? GTA service who has not paid CGST at 6% is removed in statutory update. What is the impact on GTA service? I'll just read through this amendment, Adarsh, and I'll discuss with you in the next session, in the next class, which we have, which is on the Monday. I'll come back with your clarification. So what if he closes the establishment in Uttarakhand? Will he be able to avail the scheme then? Yes. If he closes down the business in Uttarakhand, then he can avail the scheme. It's an option. Okay. So we know the answer for this is B. Delhi, Jammu and Kashmir, and Puducherry are union territories having their own legislature. Mr. A is a trader of goods in the state of Sikkim, having turnover rupees 69 lakhs in the preceding financial year. Is Mr. A eligible for composition scheme? What if one of them fulfills the prescribed criteria? If one of them fulfills, other does not fulfill, not available. So everybody has to fulfill, not only one person, one registration. One is fulfilling, other is not fulfilling. So the benefit will be lost to the one fulfilling also. Yes, everybody is given a correct answer. The reasoning is correct that he is eligible for composite because the turnover limit is less than 75 lakhs in the state of Sikkim. That's important. What if the turnover? What is the turnover limit for service provider to opt for composition scheme? 3 option is B. Few people are saying D. D is not the criteria because it's a service provider. Don't get confused with this. This 10% or turnover of 5 lakhs, whichever is higher, is for a goods provider. If it's a goods provider, then he can do services up to this. The question asked is, what is the turnover limit for service provider to opt for composition scheme? For service provider, pure simple question. So it's not like marginal scheme. So this is for a marginal scheme. But for a service provider, the limit is 50 lakh rupees. That's all. Mr. A is a non-resident taxable person supplying goods in the state of Himachal Pradesh. His turnover is 87 lakh rupees. Okay. Mr. A is Mr. A eligible for compensation scheme? Yes or no? Four answer is D. No, composition scheme shall not apply to a non-resident taxable person. So since he's a non-resident taxable person, he cannot opt for composition scheme. Mr. A is a manufacturer who opted for composition scheme. Is he eligible to provide services? Yes, no. If yes, which yes? 3 yeses. Five answer. Few of them have given D. It says that you can provide service up to 10% of the turnover 5 lakh, whichever is lower. It is not lower, it is higher. If his turnover is more, then he can do more services. If it is like he's having turnover of 1 crore, okay, 10% of this is 10 lakhs. So he can do up to 10 lakhs. Then 5 lakhs will not apply. 10 lakhs or 5 lakhs, whichever is higher. So the correct answer is 10% of the turnover or 5 lakhs, whichever is higher. The GST be payable by a composition dealer who is a manufacturer is liable for GST is how much? 1%, 0.5%, 1% of turnover of taxable turnover, or 5% of the turnover in state. Six answer is A, correct. It is 1% of the turnover in state, not the turnover of taxable turnover. Taxable supplies, the taxable supplies will be applicable for a trader. The GST be payable by a composition who is a trader is liable for GST. Yes, I've told you the answer there itself, C itself. So no guesses for 7. Question number 8. What GST rate is chargeable for services supplied by goods transport agency? Eighth one, correct. It is 5 and 12%. Okay, so these are the two rates. GT. Mr. A.R. Rahman composed music to a music company who is located in a taxable territory. Is he liable to pay GST? Right. Most of you have given correct answer. No. Service provided by music composer falls under reverse charge basis. Music composer who is located in a taxable territory, it has to be under reverse charge. Now, Mr. X is a registered taxable person under GST. He has 3 branches which are situated in Karnataka, AP, and Telangana. All 3 are registered in the respective states with the same PAN, right? It has to be the same PAN. Mr. X wishes to offer composition scheme for Andhra and Telangana, and he wishes to remain a regular tax person in the state of Karnataka. Is he allowed to do so? This we know the answer. No composition scheme we have discussed that has to be adopted uniformly by all the registered person having the same PAN. Can't be different for each state. Which of the following statements are true with respect to composition taxable supplies? He can't issue tax invoice. He can issue bill of supply, cannot collect tax on outward supplies, and ITC cannot be claimed. He can issue bill of supply and he can avail ITC. He can issue bill of supply and he can collect tax on outward supplies. Or first one, he can't issue tax invoice on outward supplies, but he can avail ITC on outward supplies. Okay, good response for these questions. A lot of new names I'm seeing. Shakti Shri, Varsha Shetty, Ishan, Aisha, Darshan. So many people. Correct. 11, the answer is B. He can issue bill of supply, cannot collect tax on outward supplies, and ITC cannot be claimed. So this is the correct statement. Last MCQ for the day. What is not an advantage for composition scheme levy? What is not an advantage? Well, correct. Darshan, the first one to give the answer, right? More compliance required. This is not related to composition because composition scheme, you have low rate of tax, simple calculation of tax, and simple annual return. There's no much of a compliance. So this is the correct answer. Great. So this is what we had for charge. Was a nice session to get such a feedback from you, so many answers, so much of participation. Continue reading the composition scheme, continue reading the charge topic, and if there's any question, as routine, we will take up the questions in the next session. Please go through the reading, have a good weekend, and let's meet back on Monday.